Hello, I'm Nick Nassad. Welcome to another edition of CMS Forex News. Today's Thursday, December 20th. The yen rose today as more firms reported losses linked to credit markets. Demand for higher-yielding assets such as the British pound-yen pair declined, and the British currency fell for a second straight day. The fall in risk appetite for carry trade was led by today's news that Bear Stearn, the second-largest underwriter of U.S. mortgage bonds, reported its first quarterly loss as a public company. The pound-yen pair fell more than 200 pips today and is down 400 pips in the last two sessions. The pound fell against other currencies as well, as data showed the current account deficit widening to a record last quarter. We noted yesterday how the pound fell below $2 for the first time since September 20th. Today, the pair fell close to 180 pips and was trading near 1.9820 by 2:30 p.m. New York time. The US dollar-Canadian dollar pair broke through support and traded below parity during New York trading. It is a 3-week low for the greenback against its northern counterpart. News that central banks are pumping money into credit markets helped ease fears of a recession in North America and boosted the loonie. Turning to some fundamental news, we saw that the trade balance for Japan fell to 890 billion yen, smaller than expectations. Rising oil prices inflated imports while exports to the U.S. dropped for the third month in a row. The Bank of Japan held rates steady at 0.5%, as the bank downgraded its assessment of the economy. A major drag on economic expansion is slowing housing starts. In Germany, consumer confidence rebounded from a 2-year low as employment rose. Shoppers grew more optimistic and increased their spending for the holiday season. The UK had a large batch of data today. Most important, as we mentioned earlier, was the report on the current account, which widened to a £20 billion deficit. The deficit in the trade in goods grew by £3 billion as surging oil costs pushed up the value of overall imports. Other data in the UK showed government borrowing increasing to £11.2 billion and the value of mortgage approvals increasing in November to £4.5 billion from £4.2 billion in October. In the US, the final version of third quarter GDP was unrevised, but the core PCE inflation rate edged up to 2%. Personal consumption increased as well, as higher retail sales pushed it up in the revised version. That upward change to the GDP was offset by lower investments in inventory. The number of Americans filing first-time claims for unemployment benefits rose by 12,000, more than expected, and put the 4-week average of this indicator to a 2-year high. A slowdown in the labor market may mean consumers have less money to spend, hurting economic growth. The index of leading economic indicators measured negative 0.4%, the third negative result in 4 months. Declines in stock prices, the money supply, consumer sentiment, and an increase in firings were the main causes for the lower figure. Finally, the Philly Fed Index registered a negative 5.7 reading for December, the lowest level since April of 2003. The contraction in the indicator was unexpected and points to pessimism from business executives about the weakening economy. Taking a look at some upcoming releases, we get current account data and industrial new orders from the Eurozone. There will be reports from the UK and Canada on retail sales. In the US, we will real data on personal income and spending and the final version of the UMich consumer sentiment. And that's it for this broadcast. Thank you for joining us today and have a good evening.